In this video, I'm going to teach you my two-step method for avoiding the false breakouts, so you can trade one of the most powerful patterns in the markets with confidence. Has this ever happened to you? You spot a perfect range, you wait for the breakout patiently, you enter the trade with full excitement, to only watch it immediately reverse against you and stop you out, and leave you staring at your screen wondering, what the hell did you do wrong? That feeling is why most of the traders give up. Today you're going to learn the secret to telling the difference between the real breakout and the fake out. My name is Islam, and for years I struggled with the same problem. I lost count of how many times I got stopped out with a false breakout until I developed a mechanical rule-based pattern for entering and exiting my trades. This system was the critical point of my trading journey, going from frustrated trader to the six-figure funded professional. I'm gonna give you my two biggest secrets for trading the breakouts, the right conditions to start looking for them, and the exact entry filter I use to trade them. And all of that will be demonstrated to you with the real-life chart examples. Before we start, let's quickly identify what makes the breakout trading profitable, that so many traders either don't know or neglect completely. Majority of people just look at the charts and try to trade every single breakout they see from a high and the low. When in reality, not every breakout is tradable, and not every breakout will keep up with the momentum that it had. This is a major mistake that keeps them caught up in a false breakouts or with the trades that don't yield enough reward for your risk and end up just getting into the break even, or even worse, stopping out you with a loss. But there's one smart way how to avoid all of the negative sides of trading the breakout and only take high quality, high probability breakout trades. And that is paying attention to the market conditions. The context is the king that will either break or make your strategy. So let's start with the single biggest mistake that keeps breakout traders poor. It has nothing to do with your entry pattern and has everything to do with the market conditions that you are trading with. Most traders fail because they are hunting for trading the breakout trades at the wrong market conditions. They see a strong trend and try to trade the breakout in the same direction. But the problem is that by the time the trend is obvious to everyone, it's already exhausted. This leads to weak breakouts that has a higher chance of faking you out and reversing. To fix this, you have to understand simple two-act play of the market: trend and range. The trend is not gonna last forever. Eventually, it runs out of steam and enters into the rangy market conditions. And the range cannot last forever. It consolidates the energy when eventually it breaks out into the new trend. And the most powerful breakout trades happen exactly at the moment when the price is transitioning from the rangy market into the trendy moves. Our job is not to chase an old and tired trend. Our job is to catch the beginning of the very next new trend. So the first rule for you is simple but very, very powerful. Stop looking for the random breakouts at the middle of the old trend. Your new job, you have to become an expert at spotting the consolidating rangy markets. These boring and sideways markets are where the explosive and life-changing trades are born. Okay, now you found the market that is consolidating, rangy, and just coiled like a spring. And now the most important question: how do you catch a real breakout without getting caught up in a false breakout? This is where our two-step confirmation system comes into the play. Number one reason why traders blow up their accounts is because they trade without a confirmation. They see just one candle putting its head above our range and they get in, all in, just full of FOMO. And the seconds later, the price slams back down into the range, stopping and wiping their account. This is literally gambling, and that's why their win rate is usually below 20%. We use the two-step system to prove if the breakout is real or no. The first step that will instantly improve your win rate is the two-candle rule. You have to wait one full body candle to close out of the range, and then one more candle to close in that direction outside of our range. This is a proof that the markets has accepted the higher price. But sometimes you see a strong breakout that immediately reverses back into the range and you miss a move. So the second way to confirm the breakout is the multi-time frame trick. So let's say you see a breakout on 1 hourly time frame, one full body candle closes outside of our range. Then you have to go 2x time frames to the lower time frame. Let's say you're on a 1 hourly time frame, you go to 30-minute time frame, and then on 30-minute time frame you have to confirm the breakout with that 2 candle rule. That should be like your 1 hourly candle that broke to the upside should have like the first candle should be breaking out and the second candle should be closing outside of our range. That would be the early confirmation that the breakout is real. Once the breakout is confirmed, we need a safe and high probability entry. Forget about all of those order blocks, fair value gaps that offer you very precise tiny entries aiming for 20-hour trades, but in reality they have less than 5% win rate. After 8 years of trading, I can tell you that having a win rate over 50% is ideal for your mindset. The other stuff, it's not compatible with our psychology. Like a humans, we cannot endure that, a lower win rate. To achieve that, we use Fibonacci retracement tool. We're gonna draw the Fibonacci level on the breakout leg and enter our trades at the 60 and 70% retracement levels, aiming for the solid 3 to 5 hour. This is a perfect balance between a very solid win rate with a very solid reward on your risk. Okay, now you know about the right market conditions that you have to trade in and the professional confirmation tool that you need to use to get a higher quality trades, right? Basically, you have the full blueprint, but here's the catch. Think about this. Can you take all of what I've said right now and go into the markets right now and implement all of that? And I believe that you have hesitated to give an answer. But this is exactly how trading gurus trick you. They tell you quote unquote a simple strategy like I've told you right now, and then they blame you that you are not able to follow all the rules and use that simple strategy. Here comes the catch. Everything I've told you is literally the meat and bones of the strategy that I personally use. But none of that never is going to work unless you change one thing. We have to make this strategy 100% mechanical. When we make this strategy 100% mechanical and I ask you, can you get this strategy and directly implement it in the markets? The answer you're going to have is instantly going to be yes. You're going to have a full bulletproof instant answer, 100% confidence in what you do. Okay, let's think about the problem that we have right now. Like the problem that we have to solve to make this strategy 100% mechanical. And if you really think about this, what is subjective in this strategy? And the answer is going to be the range. How can you find 100% mechanical range? Because if we look at the same charts with you, we can identify the range differently. We can draw our support and resistance levels differently, correct? If your range is subjective, your results are going to be not consistent. They are going to be inconsistent. And if your results are inconsistent, you don't have a business. To succeed in trading business, we have to make this process 100% mechanical. So how do we make our range mechanical? We add one element that 99% of traders ignore, or they even don't know about this. That is time. Instead of drawing our range based on what looks right for us, we are going to define our range based on the specific, non-negotiable time of the day. So here is our secret. We use the first 4 hours of the Tokyo session as the non-negotiable, mechanical, universal edge for our trading. Why Asian range? Because it's the lowest, the quietest, and the lowest volume time of the day. That time of the day, most of the times, 90% of the times, the price consolidates and builds up potential energy. And this gives us a clean and objective range to trade every single day, and all of the trades are going to be taken like during the London session, during the New York session, where all of the liquidity will flow the market and we're going to have some explosive moves. Does this make the sense? Just let me know in the comments, guys. I really need your answer. Does all of this makes the sense for you? Okay, let me quickly explain the full blueprint right now. First of all, you have to open your TradingView account and open any pair on the 15-minute time frame. Second, you have to identify the first 4 hours of the Tokyo session. This is going to be our reference point, literally our map for trading the whole day. Step number 3, we have to wait for the London and the New York sessions, and we have to see the breakout of our mechanical range and use the two-step confirmation system that I have explained to you. After that, step number 4, after we have confirmed the breakout, after some times the price is going to reverse to retest our range. At that moment, you are going to get your Fibonacci tool and draw it from the bottom of the Asian range to the top of the breakout, or if we do have the breakout to the downside, it's going to be the vice versa, from the high of the Asian range to the bottom of the breakout. And you are going to place your entries at the 60 and 70% retracement level. The stop loss is going to go beyond the 100% Fib levels, and for targets you will be aiming from 3 to 5R. The whole process is 100% mechanical. It's the same for you, for me, and for anyone else. There's no more guessing, there's only execution and following your trading plan. So now let's cover a couple of real life examples on the real charts. Okay folks, this is a real life examples of this strategy. First of all, that you have to understand, we are on a 15-minute time frame on Euro USD. These vertical lines identify the breaks of the day. Basically, this is when the new Tokyo session opens. So basically, you open the charts right before the London and New York sessions. Like sometimes it happens during the London session, sometimes it happens during the New York session. For me, it is convenient to trade the both sessions. So I open my charts right before the London session, and we have to draw the high and the low of the price action during the first 4 hours of the Tokyo session. For that, I use the Fib levels. By the way, you can copy my settings over here. Here are the settings. You see, it's just going to, and I've added these text over here. But in any way, as you can see over here, the price is breaking to the downside and retesting our Asian range. This is where we just need to get our Fib levels, draw it from the high to the low of the breakout, and let's apply it. And we are going to enter our trade at the golden zone. So basically, this is a secret that we teach inside of our mentorship program, but let me share it with you. Basically, you can enter on the golden zone, which is 60, 70, and 80% retracement levels. By the way, this is the settings for my Fib levels as well. What I would recommend for the beginner traders is to divide their trades. For example, you're risking 1%, so you have to risk 0.3% on each of 3 levels, on the 60%, on the 70%, and on the 80%. And the stop loss is going to go above this Asian high. Basically, with this way, you can aim for 5R, but sometimes the price can give like 10R trades as well. Let's cover a couple of more examples. Here's another example, and it is a little bit more interesting than the previous one. Let's draw the high and the low of the price action. Let's mark up our Asian range. First, as you can see over here, the price is breaking to the upside. We are getting the confirmed the breakout. But the most interesting part is that we are doing that before the London session. And by the way, this vertical green stripe represents the first 2 hours of the London session, and this pink stripe represents the first 2 hours of the New York session. So basically, the price is just doing some manipulation above the Asian high before the London session. And during the London session, the price is just ranging inside of the Asian range, and right before the New York session, we are breaking to the downside, and then price is going to retest our Asian range. Basically, what we do here is we draw our Fib levels from this high, from the high of the sweep to the bottom of the breakout, and then we are placing our trade at the 60% retracement level, and the stop loss for the 60% entry is going to go above 80%. And as you can see over here, the same, like with this trade, we can aim for 5R as well. And the 5R, the price gave us 5R only the next day. So basically, the lesson that you need to take from this trade is that you don't take the trades that happen before the London session. So everything that happens after the London session is valid. And when you will be trading, when you will be drawing your fib levels, you have to do it not from the high of the Asian range, but from the high of the sweep that happened prior to the real breakout. So let's move further and just cover a couple of more examples. So here is our Asian range. This is Asian low. This is our Asian high. And as you can see over here, the price is breaking out to the upside during the London session. And it is retesting our Asian range during the New York session. For those who tell like I'm from US, I cannot trade this strategy. No, you can. We do have trades during the New York session as well. And by the way, guys, this is just one of the 4 methods that we trade. We do have OP method number 2, 3, 4. This one is called OP method number 1. So basically what we do, we draw our fib levels from the bottom to the upside, and we enter our trade at the 60%, and let's say this was our trade. It gave us 5R, but if you say that the price is almost at the 80%, we could have entered at the 80% as well, and this would have give us 5R trade as well. So doesn't matter. Or you can just divide your trades into 3, one on the 60%, one on the 70%, and one on the 80%, and aim for 5R from the best case scenario trade. Let's cover one more example. This is more unusual example when we do have losses with this strategy as well. For example, what is happening here? The price is sweeping the Asian low, then we're having the breakout to the upside during the London session, and the price is retesting our Asian range during the London session, and we are getting stopped out here from one trade. But guys, we are breaking to the downside. As you can see over here, it is a confirmed breakout. One candle is breaking down, another candle confirming the breakout. So basically, we can trade the OP method number 1, the breakout trade, to the downside from here. We have a successful breakout to the downside, the entry at the 60%, the stop loss goes above 80%, and we will be aiming for, in this case, guys, the price didn't give us quite like 5R trade. So this trade, probably this would have ended up being the break-even trade, or like aiming for 4R is pretty good as well. So basically you can aim something around like 3 to 5R with this trading strategy. And why this strategy is so mechanical? Because you can trade the OP method number 1 only one time per one side. For example, we can trade the OP number 1 to the upside one time, and we can trade OP method number 1 to the downside one time. Only and only. So basically, let's say we do have one like bad trade over here. The price broke to the upside. We will not be trading the second breakout. So basically, if you open the charts and if you see that the OP method number 1 already played out or failed to play it out, that means that you don't have to look at the charts anymore that day, at least for the OP method number 1 trade. So this is a beauty of OP methods that makes them 100% mechanical. Okay, let's cover this example and we can wrap it up. Okay guys, look, here's our Asian high, this is our Asian low, and over here the price is breaking out. We do have one full body candle that broke to the downside, one more candle closing outside of our Asian range. Basically what we do here is that we draw our fib levels from this high to this low, and we enter our trade. Like we enter our trade as usual at the 60% retracement level. The stop loss goes above the 80% retracement levels, and we will be aiming for 5R. But as I said, sometimes price can give us like 10R or like 15R trades as well. But this is more kind of like the exclusions. Like most of the times we are going to get 5R trades with this method. So now you have a full professional blueprint. You know why most of the breakout traders fail. You know how to confirm the breakout, And now you have the real secret, the 100% mechanical price plus time theory Asian range breakout strategy. You have a complete A to Z strategy and there's no more guesswork, period. But here's the catch. This is what separates the six-figure funded traders from the amateurs and those who keep at the break-even phase. This range explosion strategy, OP method number 1, is the killer, period. If the markets are coiling for the breakout. But what about all of those choppy and rangy days when the markets doesn't explode? What about the days when we do have a lot of high volatility where the price is just sweeping the highs and lows and reversing? What about the trendy days? How do you actually trade the trendy days? For all of that, you need separate different tools to trade. Because the one tool is not going to perform in all the market conditions. You need the right tool for the right job. And that complete toolbox with different strategies to trade different market conditions, and most importantly, how to differentiate different market conditions to know which tool to use today. And all of that we teach inside our mentorship program. Inside our mentorship program, we do have 4 different patterns, 4 OP investing methods that you can use to handle all of the different market conditions. If you're done guessing and want to gain a real edge over the markets, just send me word ready on my social media, Instagram or Telegram. I will leave the links below. Me or my team will contact you and give you all of the information about our mentorship, and we will get started with you. But if you're not ready yet and want to get more info about the OP investing methods and why do they work, just watch this video.